What if the biggest economic collapse of our lifetime wasn't a failure, but a feature? What if every dollar you've ever earned, every job you've ever lost, and every recovery you've been promised was part of a single, silent restructuring plan, decades in the making? Right now, inflation eats your paycheck. Debt traps entire nations. Prices rise, but the wealth gap widens. You're told it's just the market. But what if the real market, the shadow market, has already been hijacked? Here's the uncomfortable truth. The financial elite didn't lose control in 2008. They tightened it. They used the crisis to build the infrastructure of a new economic order, a digital reset that rewires global money at the code level. We're not talking about digital convenience. We're talking about programmable control, currencies that expire, accounts that can be frozen, and debt that never truly disappears. So as you watch this, ask yourself, who really owns the global balance sheet? Because the answer is darker than you think. Before we dive in, let me know where you're rewatching from in the comments, and hit subscribe if you're ready for the unfiltered truth they rather you scroll past. Because tonight we follow the money, from 2008 to the code that's rewriting the global economy. Let's rewind, not to 2020 or 2019, but to 2008, the year everything cracked open. Officially, it was the housing bubble. Banks took too many risks, Wall Street got greedy, and the system imploded. That's what they told you. But let's peel back the mask. What really collapsed wasn't the housing market, it was trust. The world discovered that the biggest banks weren't lending real money. They were trading synthetic promises, derivatives stacked on top of debt, bundled into assets nobody understood. Sound familiar? Those derivatives ballooned into a $600 trillion shadow market, 10 times the size of global GDP. When it all started to unravel, governments didn't punish the architects, they bailed them out. And here, yes, where it gets dark, the bailout wasn't your rescue, it was reconstruction. Through quantitative easing, QE, central banks printed over $10 trillion between 2008 and 2014. They told you it was stimulus. But what it really did was nationalize private losses and institutionalize dependency. The markets stopped being free. They became synthetic too. From then on, every crisis became a liquidity event. Every downturn became a data opportunity. Fast forward to 2020. Another crisis, another panic, another flood of digital money. But this time, the fix wasn't just financial. It was structural. The world locked down. Economies froze. And in the chaos, central banks and tech firms quietly began the next phase, digital currency frameworks. Sound familiar? Just like 2008, the solution came prepackaged, tested, ready, and sold as salvation. The Bank for International Settlements, the IMF, and over 130 central banks began pilot programs for CBDCs, central bank digital currencies. But here's the chilling part. While the world debated vaccines and elections, the architecture of a programmable financial system was being written in real time. A system where every transaction is traceable, every payment is permissioned, every citizen identifiable. Sound familiar yet? Because we've seen this movie before. Every time a crisis hits, power consolidates. The few control the many. Only this time the control isn't through Wall Street, it's through code. And that brings us to the real turning point. The one name, the one meeting, the one document that shifted the financial world from chaos to command. In 2019, just months before the pandemic, a group of unelected officials met in Basel, Switzerland, behind the walls of the Bank for International Settlements, the central bank of central banks. Their goal? To solve a problem they created. How to keep the global system alive when the next liquidity crisis hit. Their solution? Don't fix the system, replace it. They called it the Global Reset Agenda, and the keystone technology was the CBDC. Unlike your checking account, a CBDC doesn't live in a private bank. It lives on a government-controlled ledger. That means every unit of currency is programmable. They can decide where it goes, when it expires, even what you can buy with it. And here is where the old playbook returns. The same institutions that collapsed the world economy in 2008 are the ones advising this digital transformation. JP Morgan, BlackRock, the IMF, the World Economic Forum, all united under a single narrative: build back better. You've heard that phrase, but have you ever asked who's building and who's being rebuilt? The receipts trace back to a series of financial papers and closed-door discussions that predate the pandemic. And once you see the names, you'll understand that this wasn't reaction. It was preparation. Stay with me, because the receipt is wilder than you think. Let's unpack how this really works, because it's not about conspiracy theory. It's about conspiracy structure. After 2008, central banks discovered a powerful truth: liquidity equals control. When markets froze, the Federal Reserve injected $16 trillion in emergency liquidity, not just into U.S. banks, but to foreign institutions across Europe and Asia. That was the moment national sovereignty blurred. Fast forward a decade, and the Fed's balance sheet has ballooned from $870 billion to over $9 trillion. The ECB, the Bank of Japan, and the People's Bank of China followed the same playbook. But here's the hidden equation: liquidity, dependency, control. By flooding the system with artificial money, they rewired global finance to rely on central intervention. Private banking was replaced with central coordination. Then came the digital bridge. Enter Project Helvetia, Project Dunbar, Project M-Bridge, joint ventures between central banks and the BIS to create interoperable CBDC networks. Translation: digital pipelines connecting every major economy under a single programmable standard. The sales pitch: faster payments, inclusive finance, transparency. The reality: a programmable leash around every transaction on Earth. Think of it like this: today's money is dumb. It doesn't know who owns it. Tomorrow's money is smart and loyal only to its issuer. Example: you buy fuel. Under a CBDC, your carbon score triggers a spending restriction, or maybe your funds expire to encourage spending during a recession. Sound far-fetched? China already does it. The digital yuan has built-in expiration features and regional controls. In Nigeria, the Naira rollout saw citizens' cash withdrawn from circulation to force digital adoption. Within months, protests erupted, but the system stayed online. Now zoom out. The WEF's Great Reset white papers from 2020-2022 directly link climate policy, digital identity, and monetary reform into one stack. It's not just about money, it's about data fusion. Under the new model, your financial footprint becomes your social passport. Every payment is a data point. Every data point feeds an algorithm, and the algorithm decides your credit, access, even movement. This is the final phase of financial colonization, not through guns or trade, but through code. Let's look at 5 numbers that show just how deep this goes. $91 trillion, the total value of global digital payments processed in 2023, up 300% from a decade earlier. 98%, the percentage of global GDP represented by countries now researching or developing CBDCs. Source: Atlantic Council 2025, 4.2 billion. The estimated number of people already using government-linked digital wallets. $3.2 trillion assets under management by BlackRock alone, now advising central banks on digital liquidity strategies. 2030, the target year named in multiple IMF and WEF documents for full CBDC interoperability. So the question isn't if money becomes programmable, it's when. And once it does, every illusion of independence evaporates. Remember, too big to fail? That was phase 1, centralization of institutions. This is phase 2, centralization of transactions. In other words, the global reset isn't about rebuilding the economy. It's about rebuilding obedience. Every system has moral hazard, but when that hazard becomes code, it's no longer risk. It's design. Let's connect the dots further. During the 2020 crisis, the Federal Reserve partnered with private fintech firms like Accenture and Ripple Labs to explore digital dollar prototypes. Ripple, once labeled a crypto outsider, is now advising multiple central banks on cross-border settlement systems. Meanwhile, the European Central Bank is piloting the digital euro, with direct oversight from the BIS Innovation Hub. And the same firms that securitized your mortgage in 2008 are writing the code that will securitize your identity in 2030. Coincidence? Hardly. The elite learned from 2008 that transparency is their enemy. So they're building a new system where the architecture itself hides the power. In the old system, banks gambled with leverage. In the new one, they control the ledger. Imagine this, a future where you don't hold money, you rent access to it. A future where dissent isn't punished with handcuffs but with a temporary suspension of account privileges. We're already halfway there. The Canadian trucker protests in 2022 showed how fast digital infrastructure can freeze assets. No court order, no warrant, just an API call. Now scale that to 8 billion people under a single interoperable financial grid. They don't need to seize your wealth. They can simply switch it off. And that's the true brilliance and danger of the global reset. It's not a coup of nations. It's a coup of narratives. They tell you it's innovation, inclusion, stability. But look deeper. It's obedience by design. So where does that leave us? We are standing at the edge of the most profound economic transformation in modern history. One sold as convenience, but built for control. The elites aren't hiding it anymore. The World Economic Forum calls it stakeholder capitalism. The IMF calls it monetary evolution. But underneath the branding lies the same architecture of 2008, only now it's faster, digital, and irreversible. When liquidity becomes code, freedom becomes a variable. The next collapse won't look like 2008. It won't be Wall Street traders screaming into phones. It'll be you standing at an ATM that says, "Service unavailable." Your balance won't vanish, it'll just be paused. Because the system won't need to steal from you directly. It'll just rewrite the rules of money. This is the world being built, a world where currency is compliance and control is convenience. But here's the truth they can't digitize: awareness. Every view, every share, every conversation chips away at the illusion. Because they only win when we believe the reset is inevitable. It's not. History doesn't repeat, it rhymes. And right now the rhyme sounds a lot like 2008, 1929, and every engineered collapse before it. So ask yourself, are we wiser now, or just walking the same path in better suits? If you want to stay ahead of the narrative, subscribe, share this video, and join the conversation below. Because the reset may be global, but so is the resistance.